Thank you guys for participating, and the goal of this panel is to talk about deep tech, and I think deep tech investment will be revolutionized over the coming, forever, but over the coming 5 years there will be massive changes to how deep tech financing is done, especially in the early stages, especially in Europe, partly because of the things we've seen earlier today. And I would like us to discuss this a bit and where this is going and how to deep tech invest, because we know, already agreed that deep tech is very important. So maybe you can introduce yourself briefly and say one thing you're passionate about or something about your investment thesis. And maybe I'll start.
Sure. So yeah, my name is Ha. I'm a principal at Cambrial Capital. We are a fund of funds that's exclusively focused on the crypto asset class. And one thing I'm passionate about is actually what you mentioned before, Elad, about collaboration tech. So looking at crypto networks not as the future of money, nor the future of the internet with Web3, but actually the future of organizations or how we as humans collaborate and socially organize ourselves.
Cool. I'm Philipp. I work at AngelList, where I help other people raise funds and syndicates to invest in early stage startups. I've been doing this for 5 years at AngelList and another 7 years at other funds. And I run a small fund on the side that invests very actively in, you could call it deep-ish tech companies all across Europe. And yeah, so very happy to share and discuss with you guys.
Well, first of all, thank you very much, Germany, for having a train strike. Pretty much what happens in the UK, so it's great. More seriously, thank you so much for all speaking English. I know many of you have the option to do that, and it's a remarkable feature of Berlin that actually people do. Joe briefly mentioned Isomer Capital early on. What we're passionate about is entrepreneurs. It just so happens that some of those entrepreneurs build funds. And we have 3 amazing entrepreneurs building a fund here today. That's what we're passionate about. As a consequence, they support entrepreneurs, and we build a better place in terms of technology, in terms of society. But it starts with VCs in many cases. There's an opportunity for a new type of VC in Europe. We focus only on Europe. We think Europe is an extremely special place right now in terms of VC investment and therefore technology investment.
Thank you.
Can we say it again? No.
So we have a very diverse or varied, let's say, group of panelists. One of them, so Chris, has been involved in very early stages in the pre-seed as one of the mentors, board members of Entrepreneur First, and is also in the fund-of-fund level, so kind of seeing it from both ends. Philipp has done a lot of early stage, very first money in investments, and has done I actually don't know before crypto. So you're actually doing a fund of crypto funds, right? Which is an entirely new. Are you the first?
No, there are probably 6 meaningful ones globally. We might be the only one that's meaningful in Europe.
So a very varied, set of expertise. I want to ask you, why do you invest in deep tech? So what do you think is there an advantage to investing in deep tech, and if so, what? Who wants to start?
Well, first of all, it's exciting. Because it stretches your mind, and I think the day that you stop having your mind stretch means probably the day your mind stops. But more importantly, what are you actually looking for when you're making an investment? And here I'm going to think about funds and companies in the same breath, because actually in a way, when we evaluate a fund, it's a very similar way that VCs value a company. You're looking for something that hasn't been done before. And of course, deep tech does offer a lot of opportunities there. We are not about, and some VCs are, but we are not about the idea of backing a company or a fund that can just get there by marketing and just by sheer amount of money, getting there first. Of course, there will be companies that are similar to that, but it's a very nice idea that you can back an idea. The challenge of these deep tech ideas, I don't want to come across as just somebody that thinks about the positive, although that's a nice place to inhabit, is they turn into a business at some point. And actually, I have personally supervised, when I was an entrepreneur, science projects, which are fantastic. They're brilliant. And the fundamental thing about a science project is it never really creates any value for investors, or in fact, indeed, the entrepreneurs.
I think everything, but most of the things we can invest in and have invested in over the past, say, 15 years in Europe and Germany, and big successes were relatively mundane in the technological innovation, the household e-commerce brand names, etc. And that's where I started my career. So I started my career completely by accident in venture capital, and then tried to move away from e-commerce and media investments. And so it sort of always got a little bit weirder, and the structures got a little bit funkier. And then, I think the earliest stages of ambitious projects are, first of all, where you talk to the most interesting people, because they are people that see the world in different ways, therefore build companies that take on the world in different ways, which then in turn hopefully will deliver returns as an investor that are different. I think it's clear that they might be complete wipeouts, but also when they succeed, can be much bigger in the opportunity they bring. So that's what I find generally interesting. On a personal level, I just really enjoy being around people who are giddy with excitement about what they do, and people who have found a way to look at the world that others disagree or don't yet agree with is probably the most exciting place, or the most exciting conversation you can have with anybody. So, always trying, always looking, always working on the truer version of one wants to get across. That's the kind of entrepreneur I want to work with, and it turns out they usually work in new fields and things that haven't been, looked over and combed over by hundreds of others.
It's kind of interesting. It's like a mix of personal, so the personal and the financial kind of link, right? I mean, you do it because of personal reasons, but the people who do have the same personal reasons are the people who create these novel success stories. Had same question. Why do you invest in tech, in particular in blockchain tech?
Yeah, so I think maybe also to address these 2 points, the personal side of things is my background is in industrial engineering management. So I've always been between like tech and the business world, and just out of pure intellectual curiosity, I think the technical side of things have always drawn me to it. I looked a lot at automation engineering, and actually if you compare the mechanism design of crypto networks these days, there are a lot of similarities to basically automation engineering. And then before joining Cambrial, I was an investment manager at Project A. And at Project A, I also looked at a lot of more technical investments. And on the business side of things, looking at potential investment opportunities, we always try to think of economic modes and basically modes for defensibility. Like what can you create that's not easy to copy. And if you think in the traditional way, there are only a couple of economic modes that you can think of. There's efficient scale markets, there's economies of scale, there's intangible assets, and then there's network effects. If you look at the basically last generation of basically tech investments or venture investments in Europe, a lot has been more about creating networks that need to reach a certain scale, and then at some point you can turn that into a profitable business. Look at marketplaces, for example. A lot of marketplaces were founded, or e-commerce is the same. It's about building up liquidity for something, and then once you have enough liquidity on the platform, you can monetize it very well. So I think crypto networks are actually offering a new method to get to efficient scale or to critical mass of these marketplaces in a way that you can basically build up a community, incentivize them, while actually also aligning your incentives with the community. And that's just very, very interesting, and it hasn't happened before. And it creates this new asset class that's, I think, a once-in-a-lifetime opportunity for me to step in. So yeah, that's for me reason enough to invest in this.
Yeah. So actually much closer between the personal and the financial, right? I mean, the personal is the financial in this case because they both come from the same place, a new way of doing things. So let me ask you, maybe we have a bunch of founders in the audience, and they always are looking for advice on how to, you know, make it bigger and better. And the deep tech founders, which are the ones we tend to attract, have a unique problem, which is it's very hard for them to attract VC funding. As a deep tech founder, you go between VCs and you're like, here's my amazing thing that you probably need a PhD to fully understand, and the VC is like, I have 20 minutes. Right? So they have slower business traction, they have slower metrics, and VCs find it difficult. It's not the way that VCs, especially in Europe, are used to working. Do you have any advice for founders that are grappling with these issues?
Maybe I can start with this one. My first advice would be talk to the right ones. Yeah. You can waste so much time chasing the wrong leads and basically just like navigating your network and basically trying to identify the right investors to talk to, right stage, right sector fit, right kind of like understanding of whatever you're doing. That's already eliminating probably 90% of the work. And fundraising is very mundane and takes a lot of time. If you can cut out 90% of the work, you can reduce it down from 6 months down to like maybe a couple of weeks. And another point would be, so think of your strength and weaknesses and kind of like try to like also have empathy with the people you talk to. A lot of the VCs in Europe, they come from a telecommunications, media or commerce background. So they just basically, they are not product managers, they are not software engineers, they're not your typical setup. So if you basically try to wow them with your tech, that's hard to do. So try to talk to the right guys, and especially if you're in early stage and you need a longer time to get to commercial validation because you're basically trying to like do something that has never been done before. Try to like really bridge this time over like with people that are working closer with you, that can add value and that can actually understand what you do. So huge fan of what you guys are doing.
Thank you.
Yeah, I think in general, it's getting easier by the month. So even the big funds that traditionally have looked at, say, less technically deep companies are now getting much more active in trying to understand what is going on. What are these, you know, I think, first of all, taking a step back, what is deep tech? You know, you could quote, take that, how deep is your tech? And get that in your ear for the rest of the day. Because I had it in my ears for this morning since I read your questions. I think the point is, you know, for someone, a machine learning improvement on a marketplace or a SaaS business is already pretty technical and hard to understand and hard to evaluate. For someone else, that's not deep tech. Right? That's just some machine learning algorithm, and that's easy. So I think it really depends, but all these large funds that have been actively investing are looking at more technically diverse teams, or at teams that can be put apart from others, not just by execution, but also by the technology they're building. Then, you know, completely agree with Ha. You know, you need to obviously talk to the right people. There are many ways today finding out who these people are, which companies, which of your favorite companies that are, you know, flying the flag of technology and innovation, who were their angel investors, who were their VCs, and you know the content is out there. There's search, but I think also the burden on the deep tech entrepreneur is to do the same that the business-only founder had to do or has to do today, which is to build a part of their team in an area that they don't understand as well. So if you have someone, you know, who's a recent grad from WHU, for you know, an example in Germany, who comes and wants to build, say, a pretty execution-heavy e-commerce company, they still need to build a tech team that actually builds the product that reaches people, or executes the marketing in a scalable way. And they don't necessarily understand that, but they need to start understanding, how do these people think, who can I bring on board, so we have a more complete package. I don't think it's useful or getting anywhere saying, well, we're a deep tech company, so nobody understands us, so their fault. No, it's also your fault as an entrepreneur not to be able to attract the right talent to explain and bring the message across what you're doing and why it's interesting. I think, and knowing a lot of these companies, I can still say in our portfolio, there's probably 40 to 50 companies that are highly technical. Not all of them can communicate well.
So I think that I wouldn't add too much more to those very good points. When you're looking for VCs, don't just read what the website says of what they do. Actually see what they've invested in, because that's a much bigger clue. I think there's a really hard question that has to be asked for many deep tech companies. Not only is it a hard question sort of personally to ask, it's also quite difficult to know how to get to the answer. And the question is this: is this a product or a company? And is what you are doing and the implications of what you're doing building a scalable company or not? Venture capital is only one way to raise funds. The notion of venture capital is really simple. You input 1 and you get 10 out. Now, many companies, including many who are supported by venture capital, I hasten to add, will not deliver that result. In fact, the majority will not deliver that result. So thinking about what is the implications of your product? Can you build multiple products? Is the opportunity sort of big enough? And then I think there is the final point I would say is some of the most technical people that I have ever met who have been really successful have a beautiful way of communicating. They understand that many of the stakeholders that they need to convince, whether it's VCs, whether it's customers, whatever those might be, will not understand how they do what they do. But they want to understand what is the benefit, what is the fundamental reason for this technology existing, and actually what is going to be the net benefit from a business point of view. It's a hard question.
So I'm hearing, to sum up, I'm hearing prioritize and choose who you talk to carefully, and also communicate, right?
A person who doesn't understand machine learning or blockchain is not going to be impressed by a half an hour detailed dialogue on this subject. The slightly worrying thing is 90% will nod and shake, and they will give you the impression that they have completely understood.
Yeah. We haven't defined the term deep tech, and that's because it's this question that's always asked, and then it's debated, and then we end up with the same concept of what deep tech is that we started with. So I'm going to be the dictator of what deep tech is for these purposes. I've been struggling with this for 2 years. I say deep tech is the thing that is very possibly going to fail, where the tech has a good chance of failing to develop. And if the tech doesn't have the chance to fail, then it's not deep tech. And that's pretty good, because very few people are going to admit, yes, my tech is very possibly going to fail. My tech development very possibly going to fail. So this is a really good litmus test for what actually is deep tech. So I want, saying on the same topic, deep tech is actually very hard to due diligence. So we've seen Theanos, we've seen half of all crypto projects, and I'll put it very, that's very conservative. So it's very hard for an investor to actually get in and figure out how to due diligence a deep tech project. I'd like to ask you about what you think are the unique challenges in due diligence for deep tech, and maybe offer some strategies about how to address these difficulties.
Look, this may be an oversimplification, but it doesn't matter what your company is doing. The fundamental thing is the entrepreneur and the team around it. And so we would be focusing all our energy on that aspect, because it is highly likely whatever cunning plan there is to develop and to evolve from a business point of view the technology, within 1 year it would have changed 50%, within 2 years it would have changed 100%. And the question you're really asking yourself is, does that entrepreneurial team have the self-awareness, the mental ability? And I don't mean sort of human capacity or anything to do with intellect. I'm just talking the self-awareness to say, guys, we're on the wrong tree here. We need to go and find another tree, and have that ability to do that, which is really hard when you've spent 2 years on the other tree, if you're following me. So I think that's the biggest thing that we would think about in due diligence.
Can I challenge this?
Yes,
because I completely agree, and yet I have a lot of
challenge.
reservations.
Yes, right.
Because the problem with due diligencing the team is that you're falling into the patterns. You have always a risk. I mean, of falling to the patterns you already know of. It's almost ad hominem, right? You're looking at the person and not the idea, and there's some aspect missing. So how do you deal with that, contrast?
Look, we are in the business of risk. We are a venture capital fund of funds. Key word at the beginning. That's just what we have to live with. The reason I'm specifically saying we're not going to go and hire, Albert Einstein's sort of grandson to understand the tech is because it doesn't matter, because it will change in the life of the company.
I think you're right, but I think that's what you have to do for every company.
Well, of course.
So, when you always evaluate the entrepreneur for whether they're able to pick the right thing, I think, especially in deep tech, because the right thing is more elusive, harder to communicate to you or us as investors, it's, again, harder to figure out if this, the question I'm asking myself in due diligence is this, but then the question is, does this tree even exist?
Yes.
Right? So how do I find out if this tree even exists? So
That's a fair comment.
I invest in a lot of companies. I won't say the number because you think I'm crazy. So we back deep tech from synthetic biology to crypto, from machine learning and machine vision through to new compounds and quantum computing. So literally everything that is sort of definitely can fail on the technology side. How do we figure out if this stuff works? We ask people that know this stuff that we can trust, that have shown us that we can trust them, that have shown us that they know the stuff. So these two things are really important. A lot of these people have invested in our fund, so it's quite easy to say, hey, your money's at stake, should we invest in this company? That helps really well. And then, going from there, building conversations with other investors in this space for us is really important. So working with someone who's a known crypto investor on a crypto deal. If someone is, has been a surgeon, now works at a large VC fund and does sort of frontier medtech investments, work with that person to figure out whether a new idea that you're looking at is worth pursuing. And for us, we found out it doesn't matter whether that person's also a seed investor or whether they invest in Series A or B or C, because they know this space and they can say, oh, well, this is the big kahuna, you need to look out for what they're doing, and I read some research, and actually, thanks for bringing this to my attention, because, maybe in a year or two, I can back this company. So that's a way for us to scalably sort of near source our due diligence. And in the person, I think we've looked at our portfolio over the time, and we found that the most successful entrepreneurs at our point in time, which is probably Series A and B of the companies that we backed at pre-seed or seed, where we can now say, okay, these guys or girls look like they're successful. They're executing visionaries. So, and to be a visionary, you need to be very smart. You need to be very understanding and thoughtful. And to communicate that vision, you also need to, have that empathy and understanding of the other person. But to be the executor, you don't just have to blindly go. You actually have to pick the right things. You have to pick the right tree. You have to pick the right people to work with, and then you have to relentlessly go for gold. Mm-hmm. So those two, for us, have turned out, no matter of the industry, have turned out to be the characteristics of a leading member of the team to be absolutely necessary to build a success.
So I'm hearing team and expert advice, and it's interesting what was implied, but you didn't say explicitly. You're asking expert advice from investors, not from experts for hire.
So also, not for hire, but also operators.
Operators, but that are either invested in you or invested
they're invested in us, but they're not sort of professional investors. There might be a CTO in a Series B biotech company.
No.
Mm-hmm. Yeah. But they would look at a company also from a commercial perspective, yes.
And what's ringing in my ear is the expert who says, that is not possible.
Correct.
And then, of course, it becomes possible.
Yeah.
So I'm not saying don't
Interesting,
do it.
yeah.
I'm not saying these are all, there's no wrong answers here, especially from Philipp.
Oh.
Right. Next.
I'm almost afraid to ask, how do you due diligence a blockchain company?
Oh, so gladly we would invest in funds and in companies. So we have to pick the people that can pick the people.
Yeah.
And there it comes very handy actually that I ran investment process myself before. So nothing new to add there, but maybe just to add a little bit of color. I totally agree with you that doing reference calls is probably one of the most important things to do during a due diligence. And at Project A, we always try to do 3 types of reference calls. We try to have a reference call with an industry expert, with a technology expert, and also with someone who wants to work with the team or with someone in the team. And I think with deep tech, especially the tech expert piece is actually very difficult to find. So very often when you talk to a VC guy, they don't have like person in the network that they can ask to like find out about ZK stocks. Right, because it's so new, it hasn't been done before, so there are no experts. And even with reference calls, you can also fall into the trap of doing too many reference calls. You talk to too many people that say that's not possible, so you end up not taking that risk that you should have taken. Yeah. So it's a very like, balanced act to do, and it's more an art than a science. It's very, very difficult. And I can't say there's like any type of a criteria or checklist that I can go after. In the end, it's about de-risking your investment decision. And in the very end, you still have to have a contrarian opinion and a little bit of a gut feeling with that as well. And the ideal part then would be to team up with someone who can add that missing piece as a co-investor. So if you're a non-tech investor, team up with someone at the same stage who could actually evaluate the tech. Don't partner up with someone who's invested in them before because they're already incentivized to sell something to you. Don't partner up with something who hasn't invested because they don't have skin in the game, but someone who is willing to right now put in money with you. And if that's the case, and if they understand the technology, then you can consider it as de-risk.
So again, a fellow investor who's also an expert. There's a question that is not here and I don't have time to ask, but I'd love to know the answer offline, which is, as you are investing in funds and as a VC, I'm really wondering, how do you decide which fund manager that invests in deep tech you would go with? But let's skip this for offline.
Shall I tell him?
Yeah.
3 Israelis.
I wasn't looking for that, but
well, look, the answer is deep and manyfold. Fundamentally, does the community that deep tech VC wants to support want them to be?
Mm-hmm.
And there are lots of people here that have an opinion on that, I guess.
Could I throw one in your DD pot before you start cooking that one? So I think there's a shortcut to DD of technical stuff as well, which is ask the customer. So in the end, your expert, your fellow investor, none of that matters unless the customer wants to buy the product. And if the customer probably has a deep understanding, but he definitely knows whether it has a value for him or not. So if you get a customer, a group of customers buying the product, in a way, then you have to check willingness to pay, the number of customers, and blah, blah, blah. But that's kind of a short way to answer.
Can I counter this for a second? So Henry Ford, well, one of the Ford brothers, famously said, if I ask the customer what they want, they would ask for faster horses. Specifically in deep tech, you're selling magic, you're selling sci-fi that people either don't believe is possible or think it will arrive tomorrow morning. So as a data scientist, I experienced this. People go from saying, oh, this can possibly be done to, oh, why didn't you deliver, the perfect results yesterday? Blockchain is the same. They come from, oh, a currency that you program, that sound programmed is not worth anything, to, oh my God, Bitcoin is dropping from 20,000 to 3,000. Something must be broken. There's this crazy roller coaster of expectations, but what you don't have is the customer that says, oh yeah, I understand the intricacies of the technology that you're developing right now, and I'll go along with you and I'll pay for it. You have this not in B2C at all, in B2B very hard. It's very hard, unless you're selling to professors or to VCs.
Well, so I'll take that argument. So Henry Ford, when he said that, there was a fanatical devotion to the horseless carriage. There were all these hobbyists, right, who, you're right, there was not a mass market, but there was these weird guys who cooked this thing up in their garage and did it. Exactly the same as when Apple started. Hobby computers were the origin of that industry. So I get what you say, and I don't say it's always possible to ask a customer, but who could the customer be? Well, it's these fanatics. So if you have all these crazy guys in their garage blowing themselves up with the internal combustion engine, you're onto something. And I don't know, how you take the company off that, but you see what I mean.
So you're saying pick your customer and then ask them what they want, or maybe the other way around. Ask 1,000 customers and go with the 5 and say, yes, I will pay for this.
Well, but also, when you do due diligence with your network, very often you have to ignore them.
Yes, exactly.
I think the point of due diligence is, if you had the experience, you could make the decision.
Yeah.
What's the next best thing to experience is, understanding what you don't know. And I think experience, over time is basically a more educated gut feeling. And this input from other people is, something you can feed back to your gut and say like, well, because you don't do the due diligence course because you don't think I want to invest. The general idea is like, this sounds really cool, I want to do it. Mm-hmm. And you're like, can I trust my gut to take this decision? And then you ask other people, and this guy's like, well, it's really hard, and that's somebody who's usually very upbeat. Then maybe you take that in a different angle than if someone who's always like, oh yeah, it's totally possible. It's like, yeah, it's been done yesterday. Mm-hmm. How much does that educate your decision really? I don't think you can really. It's your job as a fund manager to make that decision, right? So you can't let someone else make the decision.
One of the challenges that I've experienced personally is when you're dealing with deep tech, is that when you start at the very beginning of industry, there are many different ways to crack that nut. And one of them is going to win, or one or two are going to win, and a whole bunch aren't. And that's an impossible question to answer at the beginning of a technology cycle.
Yeah.
Impossible.
Maybe I want to ask one more question, and then if we have time or not, we'll open it to the audience. So I have one that I prepared a lot, but then I'm asking.
Prepared early?
Yes. So about sourcing, meaning where do you find the entrepreneurs, those deep tech entrepreneurs? So we found a lot about what their properties should be, and the team should be strong in communication and so on. But where do you find those founders? And in particular, I want to ask, what do you think about looking for them in universities? I know that's what Entrepreneur First is doing. It keeps very strong university ties and kind of imports the entrepreneurs to their program, or the PhDs to their program, to become founders. And I personally, as someone who comes from academia and is been on a professor track, taught students, worked with professors and so on. I have difficulties with that because PhD students don't make, and postdocs and so on, scientists don't make good founders. They weren't trained for this. They were trained for something else entirely. You need to retrain them. They go to industry. I went through this path myself. They go to industry. They learn how to work in a team with people who are different than them. They learn how to produce business, how to think about what business value is, and so on. So I have a strong opinion, loosely held, about this, but I would love to know what your opinion about finding talent or funding founders in particular, and about getting them in academia.
So let me answer the question from a finding funds point of view. The one thing we know for sure is that we will not find them in our office. And it's a remarkably exciting thing about little Isomer that we have to be extremely entrepreneurial about finding VCs. You may have this idea that there's a great long queue of VCs begging with their begging bowl, waiting for capital. And this is just not the case. The best VCs may not even know they want to be VCs yet. The best VCs don't need to go and meet anybody because it is already known in a very small, limited partner investment that these are the people. So going and banging on doors, standing outside until they say yes, is an important modus operandi of all investment. And the news I'm here to tell you today, it includes fund of funds. Sorry, Anne.
Did you ever convince someone to be a VC?
No. In truth, no. But did we, in some cases, I think it's fair to say, in some cases, Joe, we persuaded them not to be.
We definitely convinced them not to.
Because this is fantastic, and then we talked about 10 years and possible, sort of low returns and small fee structure, and then the economic sort of penny drop. Have we enabled? Yes, absolutely. Absolutely, and that is a very fun part of our job. It's a very fun part of our job.
Philipp?
I can tell you how to do it when you do it with many of them in very random different areas. You just work a lot with other people who invest in these areas. And you show other investors that you're a valuable person at the table for something specific, just as an entrepreneur and someone selling a product needs to sell something specific, probably start small with something very specific. And then go from there. I think that's what we tried to do, my partner and I, and that's when at AngelList we work with other funds. That's what we try to instill in everybody to, pick a niche that they can fill, and not to act like a big fund in small, but to act like a small fund in big, if that makes sense.
So boutique, you create a boutique fund and the right talent.
Well, I think a boutique fund is, to me, means something else. A boutique fund to me means traditional venture, which is 3 to 5 partners, starting with 50 or 100, growing up to maybe 300, suddenly landing in a different stage. Then you need to have generational difficulties. But that to me is like a traditional fund life cycle. That is a boutique fund, which can also work, but it's very hard to make work over a long period of time. So the ones that have survived have done it really well. And most of them that have survived are boutique funds. They're mega funds that have survived, but many are boutique funds. In our case, it's more like be a small slice of the cap table, but for the entrepreneur, we want to be the most connected fund. And that is why we invest in many companies. That is why we invest with many great investors that we look up to. And then we are able to deliver something because of that setup. And both sides are dependent on each other. But I think then you start seeing more investment opportunities from the network. And also, obviously, the founders that you work with talk about you in a positive way. They say, well, these guys helped us with this particular part, so you should have them on board. I think that is a brand building game that takes very, very long. I think, going back to the original point, like, do you find them in universities? I think absolutely, but I'm of the opinion anybody, you find entrepreneurs, I don't think anybody will or can be an entrepreneur. I think the percentage of people that should or will be an entrepreneur is the same across any sort of occupation, industry, background, education. It's maybe 1 to 3% or something like that of people that are natural leaders, that are creative enough and tolerant of risk enough that they can be entrepreneurs. So the same will happen with PhDs, the same will happen with graduate students. And it's not that 10% of business school students are better entrepreneurs. It's just they go where the money is quicker.
But I have a lot of further discussion to do on this with you. Maybe do you want to maybe a short answer? Or
I think those guys already said the smartest things.
So I think, how are we on time? Do you have time for one short question?
Maybe yes, 5 to 10 minutes. Maybe.
Okay, so again? Last one. Okay, so maybe, but you have to say which person on stage you're meaning to ask this question to. So just one.
Let me ask Chris.
Uh-oh.
I heard you say that when choosing a fund or a team, you're really looking for good communicators that they can sell you the tech and like maybe general the team. So first, like 2 comments leading to a question. So the first observation is that I'm a techie guy, so sometimes when I understand an idea, I know that this idea is a good idea. And just take blockchain. I know from the start that it's a major secularization accomplishment, and it doesn't matter like who is communicating what. I just that way, I know it. So one question is like, don't you lose out on some opportunities if you take that? And on the other side of these things, today this like incubation and investing, and of course more and more hand in hand. At least that's my kind of on-side perception. So in that spirit, is it not worth? So if you find a good idea and somehow you manage to identify it, is it not worth just supplying that needed communication or the needed entrepreneurial spirit even, and make that a good enterprise rather than say, okay, these guys are not worth, they don't even know how to communicate other than with X's and Y's and second order equations.
Well, let me answer it like this. The way you have just communicated to me right now would convince me we should talk more. Because in your face and your eyes, you communicated passion and excitement about an idea. And that is a lot of what we try to get to the bottom of.
That was unexpected, okay?
Cool. One short one can I do? Maybe if someone has one, maybe anyone.
Yes.
Yeah? No.
No.
Okay, yeah, go ahead.
Come on.
Okay. But you have to say who it's to. And it can be.
And I'm done, so.
And it is that.
I'm addressing maybe
yeah.
you work for a fund. How does crypto investing disrupt the traditional VC model?
That's a great question.
Some of the technical metrics are very different. Do you think these boutique funds that are now the big ones here locally, do you think they're adequately prepared?
That's a very good question. So I would say investing in crypto networks is very challenging because you can't reapply your mental models that you had before to something that looks completely different. Crypto assets look to some extent like currencies, like commodities, like equities, and many other things, options maybe as well. And you can't just take typical discounted cash flow methods so they try to derive a company value. And it's actually not companies that try to generate some cash flow that you can basically try to estimate, oh yeah, what's their kind of future cash flow is going to be and what their LTV to CAC ratio is like, etc. All of the things that typically VCs ask, you can't reapply them to this new asset class. So basically you have to go about, again, like finding experts that can help you with this question and that can basically try to give you a little bit of a gut feeling of like, are you thinking in the right ways and are you trying to develop new mental models that might apply to this better than before? So yeah, it's very difficult to go about that. And there's only one part. There's the other part of ICOs, for example. They're basically now traditional venture. You can also circumvent it if you want, and you can basically just go out and raise a token sale, which happened last year to probably like way too much, and probably that was a bad thing in that way. But at the same time, entrepreneurs that are maybe not the best in communicating, etc., they now have the option to like go and not pitch to VCs that basically try to find the next Mark Zuckerberg-ish person, but you can basically try to convince your own community to like also put in some stake in you. So that has maybe redefined a lot of how you to think about this, and I think that we will only find out the right ways to think about this by trying it out. There's no way to like a priori really know what's the right way to do. So just like complex systems, you have no idea, it hasn't been done before, just try it out and see how value will actually be captured by these new networks. So not sure if that fully...
But do you think this hybrid model continues to exist?
In the interest of time, let me
You can take it offline.
Yes.
So thank you very, very much, Chris, Philipp, and Ha. Thank you for joining me. And this is the first but not the last of these panels. So we'll keep this discussion going.
All right.